China is ramping up efforts to bolster its economy with a pledge to adopt a more proactive fiscal policy in 2025, aiming to counter economic challenges and support growth. The country plans to increase its fiscal deficit and issue more government bonds, signaling a commitment to greater financial flexibility and investment. China's fiscal deficit to GDP ratio is expected to rise above the usual 3% threshold, potentially reaching between 3.5% and 4%. This adjustment could translate to a deficit of approximately 4.8 trillion to 5.5 trillion yuan, reflecting the government's readiness to allocate more resources for economic stabilization and infrastructure development. The government also plans to issue more special treasury bonds and local government bonds to fund major infrastructure projects. New borrowing is expected to reach around 15 trillion yuan, further emphasizing the government's intent to inject momentum into the economy. Enhanced fiscal spending will prioritize areas such as pensions, healthcare subsidies, and consumer incentives like trade-in programs for cars and household appliances. In addition to fiscal measures, China is expected to adopt a moderately loose monetary policy, departing from its traditionally cautious stance. This could involve cutting interest rates and reducing bank reserve requirements to ensure ample liquidity and support investment and consumption. These measures come as China grapples with a struggling property market, mounting local government debt, and the potential for increased U.S. tariffs. The proactive fiscal approach underscores Beijing's commitment to stabilizing the housing sector, expanding domestic demand, and mitigating external pressures. Further details on China's economic strategy are anticipated during the National People's Congress in March 2025, as the government seeks to chart a course towards sustained growth in the face of global and domestic uncertainties. What do you think of this? Comment your thoughts.